Absolutely, yeah, for sure, Sri. I mean, over the last 12 months, we've seen the euro dollar, trade between 106 and 114. That range will prevail, although we believe the euro will find support at lower levels, and that's fundamentally on the back of having a current account surplus that's almost 3% of GDP.
How vicious, on the flip side, how vicious is the short squeeze going to be on euro if Mr. Draghi doesn't step up to the plate as far as market expectations are concerned? He doesn't meet them.
I don't think it will have a major impact, Sri. I don't think it will be as steep as the market perhaps anticipates. I think it's been well discussed. We know that Draghi is going to talk about dovishness. We know that he's going to keep the ECB's bias of low rates intact. We also know that he's going to try and adjust the QE program for buying bonds. So it could be a combination of all those things. But the real thing the market will keep an eye out for is any surprises. What else is Draghi going to say that is going to make a big difference to market perception?
Yeah, let's talk about that, because there's a sense that the market will only really get pumped up about this meeting if the ECB adopts some kind of credit easing policy, i.e. buying investment grade corporate or financial credit. Do you think that is going to be the icing on the cake? Do you think that's likely?
It's possible. It's possible. The market's been talking about a two-tiered deposit system. Everything's possible. The focus will be on reducing costs or helping reduce costs on banks. But let's break it down, for example. We're talking negative interest rates here. Negative interest rates refers to charging banks to deposit money. And we're talking quantitative easing, and that's talking about buying up bonds from banks. Those two measures are going to free up funds to allow banks to invest in more loans. You're talking about a Eurozone that has a public debt in the vicinity of 92% of GDP. So those measures and the magnitude of the decision they will make tonight will be what the market focuses on.
Let's talk about negative rates, because as you touched on, Julia did as well, there is an expectation that we could see the ECB adopt a tiered approach to NERP policy. If they do make the policy more focused and fine-tune it, is that going to take the pressure off the banks? Will that be more palatable, in other words?
It may it may be a short-term fix. We don't know about the medium to longer term. That will be something that the jury is still out on. We expect to cut deposit rates by 10, maybe even 20 basis points towards negative 0.5%. But it'll be a combination of what other factors that they introduce into the market that will trigger a reaction from the market. If we look at prior experience, you talk about negative interest rates. If you look at Switzerland and Sweden and Japan and countries like that, negative interest rates have hampered economic growth. We're talking about business sentiment being weak. We're talking about consumer recovery remaining tepid, and these are the things that Mario Draghi needs to consider before making a decision later tonight.